What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
All right. Good morning, everybody. Welcome back to another live stream. I just realized that 8cap offer just got better than ever because I've been talking about it. I just want to be really transparent and continue to tell everybody before we do it. We are planning to raise the price of Edge Finder very soon. That 8cap offer, the reason I say that got better than ever is because you still have to only make the same deposit into an 8cap account in order to still get access to Edge Finder completely free. We are finalizing all the price change details. I'm letting everyone know that in my videos, in our live streams, on our site, etc. We do have a rise in the price coming soon. It's not we just haven't changed the price in like 2 years or whatever. And we've had a lot of changes to the product, a lot of increases in what we are spending to produce the product, to maintain the product, all the new data sources, etc. So the price is going up. I'm letting you know now. If you have thought about getting a copy of Edge Finder, if you're a regular stream viewer here and you don't have a copy of Edge Finder, that window is closing to get it for today's prices. If you need some information about that, we'll drop a link here in the live stream chat to where you can speak to our support team to make sure you lock in that price today before it goes away. Worth every penny. Thank you very much, my friend. Appreciate you on that. Especially if you're going to use Edge Finder, like it's a one-time payment to get access. So if you're going to use it for 10, 15, 20 years, right? Think about the cost. The cost is pretty much free. If you see yourself as a long-term trader who would benefit from this tool, the daily cost, if you use this thing for 10 years, is like nothing. It's very, very low. And we've done that on purpose. Like we don't like the idea of just like never-ending subscription payments. Instead, we offer a one-time price that allows traders who are serious and for the long term to really benefit from, not having to pay over and over and over for something that supports your trading. Yes, we are hiking rates on Edge Finder. So just trying to stay. I know when we do it, people are going to be like, "Hey, what the heck? The price went up." But I'm telling you now, trying to let everyone know. Anyways, S&P 500 here. Nice little bump here over the weekend, but it is an interesting kind of frozen moment here. You do have oil down, but let's understand, we are doing the same thing we have seen multiple times before this in regards to the US, Iran, Israel conflict stuff. Now, I don't know the future, and maybe this time is for real. But let's be fair in saying we have seen several times where the White House is kind of outlining that the war is about to end, that there's going to be a deal signed, ceasefires are being honored, etc. And then you get something from the Iranians that shoots back the other direction. Are we going to see it happen again today? I mean, we're starting out like it looks like we're already seeing price react once again to this 90 level, right? We have seen this pattern, at this point, like 5 or 6 different times. Again, maybe this time is for real, but we have drawn our line in the sand here several times at the $90 mark because every time we've come down here, you've either had a fake through those lows and a retracement, or we immediately see buyers step in, buying oil. So I'm very curious to see. I don't make predictions, or I try not to make predictions on geopolitics, because I simply can't predict exactly how that's all going to go down. At some point, the war will end. Is it going to be this time, or is it going to be after the next round of ceasefire promises? It's really difficult to call that. So I'm not really willing to make the big claim like this time is for real. And I think that if you're wanting to have been short oil, personally, I'm not really counter trend, but if you're trading geopolitics, I feel like geopolitics are difficult, because a lot of times the best risk reward is being like super counter trend. What do I mean by that? Well, if you chase the headlines, a lot of times the headlines come out and then the price, by the time you and I are hearing about it, the price starts to reverse, because people who knew something before then are already in there, right? So if you're like, if the war, is looking like it's coming to an end, people had already known something that, the news headlines hadn't reported yet, prices move lower, you sell, and then the price bounces, right? So it's a difficult thing to try and chase headlines. So I just personally think it's worth not doing. Anyways, what's good, Tony? Good to see you here. Go with the flow. Yeah, I feel like basically, when it comes to the news headline stuff, instead of predicting that, I focus on price action. I feel like it is a more up-to-date indicator anyways for geopolitical news. And then at the same time, I'm focused on the macro, because I still see for the dollar, regardless of geopolitics, right? It could go either direction. I still see some pretty good fundamental backing reasons for the dollar to stay relatively strong. So if I'm looking at the dollar, right, let's talk about oil one more second here, because it's connected to the dollar. You have this oil price remaining elevated, and despite promises of the war coming to a close, and look, I hope the war does end. I'm not like hoping that the war continues. I'm just saying that, like, we have seen this story several times, and there's that headline fatigue where it's like every time you get this promise of a ceasefire and that doesn't actually, or we get a ceasefire or a suspension, but not the end of the war, that continues to keep oil at a spot that is very high pressure in terms of gas prices on global consumers, right? I think people are very much feeling it at the gas pumps by now, because at this point now, what you have is a situation where gas prices jumped. Everybody's like, oh, shoot, that doesn't feel so good. But now we've got like this attrition, right? The attrition damage of gas prices staying elevated for multiple months at this point. And I do think that that starts to become a weighing factor on the spending habits of the consumer and inflation. So on my Sunday video, or my Monday video yesterday, I actually talked a little bit about how I kind of have a short bias going into the week on gold and bonds. So I want to kind of focus on that. It is centered around my current bullish outlook on the US dollar. I am looking on the DXY specifically for a break through these highs on the daily time frame. I think we can see this even cleaner when we drop down to the DXY. So if you're somebody trading US dollar currency pairs, or if you are trading gold or silver, this might be a relevant conversation for you. But basically, I'm looking for the dollar index. We seem to have once again found support here at this 99 level. So again, despite promises of war is going to end, the dollar is still staying firm here for now. Now, let me just cover my bases here and tell you what I will do if I'm completely wrong in this idea, right? So I do have a short pound dollar position, which is exposed to DXY going up or down. So if the dollar index starts to completely fail here, then I'm going to cut that idea, and I will be the first one to say, hey, dollar index breaking down, I'm out of the trade. I'll take a loss on this one, right? Because I think a lot of times you hear people talk on social media about like what their ideas are, but they won't outline like, how are you going to handle it if you're wrong about this? Because, talking about when you're wrong in trading is not very popular on social media, right? So I try and just keep it real. Like when it comes to the dollar index, I think we have upside from here. If I'm dead wrong, I'll take a controlled loss and I'll move on to the next trade, and that's it. I'm looking for, with the dollar index, your key level of interest here is certainly, in my view, this 99.4 level. We have rejected this every single time we've come up to it. But to the bulls' credit, we've also held 99. We have been chattering between 99.4 and 99. From a price action perspective, I think it's binary. If you can get a nice strong breakout above 99.4, any sort of retest, in my opinion, looks attractive for further upside in the dollar index. However, just again, covering our bases here, if that breaks, that idea is nullified for me, right? At the very least from there, I'd want to see a pullback into, levels like this. Like this would be 98.50. That would kind of be your next level of major support for those of you watching the dollar index. Okay, so I do lean a little bit more on the positive side when it comes to dollar, and that is going to set up for me a little bit more of a cautious tone on stock indices, right? Same thing with the Nasdaq. And then when we go to gold, so I am actually more in the camp of thinking gold has some further downside here in the short term. Let me just say this. I am a long-term believer in buying and holding onto precious metals personally, not telling you what to do, not financial advice. But for me, longer term, I like precious metals. But I'm talking about trades here. And from a trading perspective, we've had a big flush to the downside. We've held this consolidation zone. And I have a macro outlook that I think the dollar continues to be strong on rising inflation and interest rates being held steady. We'll continue with interest rates in just a second. But when we look at the US dollar and then we look at gold, check this out. Gold is getting a -6 reading within Edgefinder's scoring matrix. What are we looking at here? If you are new to the channel, the Edgefinder is a software that aggregates a lot of economic statistics, data, market sentiment, and institutional positioning to build a bias. It is essentially a bias machine. It helps us to check a lot of data at once. As traders, these are the sorts of tools and things that professional proprietary firms, hedge funds, etc. build. They build macro dashboards like this. My company, A1 Trading, we build tools that specialize in building that for the retail trader. I am a retail trader. I know the strife of one, and I know also how important and powerful macro fundamentals are for traders and how there is a huge gap for traders in regards to actually using a software that can help them to spot what macroeconomic trends are taking place. So my view here is influenced a little bit after doing my research here within Edgefinder. We've got a fundamental score of -3. Why is it getting a -3? Well, jobs data has been okay, right? Inflation has been hot. That is not a great thing for gold because it's a strong factor for the dollar. High inflation means central banks keep those interest rates higher, less money printing, not so good for gold, right? So institutions also did some selling on gold in the latest round of commitment of traders data that we saw on Friday. So let me show you that just to back up here my stuff with gold. If I go latest COT report, what this table will show you is the commitment of traders report. The non-commercials, these are going to be your hedge funds, small banks, leveraged funds, pension funds, etc. Like what did they do in aggregate as a collective group? Well, they bought Nasdaq. So there was some bullishness in the Nasdaq, but they also sold gold. So they reduced long contracts, right? So they reduced long contracts and they increased short contracts. That is a net week over week bearish shift in institutional positioning according to the commitment of traders report for gold. So that automatically syncs up with our scorecard within Edgefinder. And you can see that institutional bias, why is it getting a neutral reading rather than a gold bearish one? Well, if you notice, the latest data shows selling, but the overall positioning of institutions is still bullish, right? So think about this. Institutions as a collective group hold a large long position in gold. And last week, they reduced that position and added shorts. Does that make sense? This concept can sometimes be very challenging for beginners who are just learning about the commitment of traders data. I try to keep my content both beginner and advanced friendly. Can you guys do me a favor? Give me a 1 in the chat if that concept, that breakdown on how COT data is scored within Edgefinder makes sense. If you could just drop a 1 in the chat, let me know we are good on that. We've covered gold in terms of institutional activity, and we're good to go on that. I just appreciate that feedback. Make sure I'm explaining it well. Basically, they have a big long position, but they seem to be decreasing it recently. It's very interesting to watch that. So is there a profit-taking cycle that's starting in gold? It's possible. And again, we kind of may have seen that started to take place in the last few months. You're seeing from a structural price action perspective, lower highs. and we're threatening a possibility of making lower lows. So I do actually have a bias this week of potentially getting short gold, which I've not been short gold in a very long time. I mean, it's been months between when I've last taken a short position. I think I shorted gold at one point in this mess, but I can't remember when. And it wasn't this. I wish I had caught that short. That would have been gorgeous. But I did not catch that one, but I caught something in here. And I think I made a small profit and then got out of it. But anyways, I am looking at gold from a 4-hour chart perspective. I like this area as a possible retest short opportunity. If you were to see a rally in gold, barring Edgefinder still has a bearish bias, that may be a short setup for me this week, looking for a continuation here off of my dollar bullish thesis. I hope that makes sense. Yeah, so gold is of high interest to me here this week. Silver, I'm going to stick to gold here just because silver can be nasty one way or the other. I don't know if you guys have seen, or maybe you've personally been on the wrong side of some of the big silver moves. Just as a reminder, there was a day, I will never forget that day, because I was sitting at the office and I was like shouting it out to my team. They were probably annoyed by me. I was like, gold is down 30%. This is unbelievable. Like, we've never seen, like, this is insane. That was this day here, right? So silver from the highs in one day had like or 1 week, I should say, it was like a 40% drop. It was unbelievable. So silver is more volatile than gold. Like, please understand, a lot of people think gold is more volatile. No, silver is far more volatile on a percentage basis. You can see it in the options data. Like, you can see the implied volatility for silver is almost always higher. So yeah, and even today, right? Gold's down gold is down 1%. Silver's down 2%. So yes, silver it can be nasty. Now that can be great if you're on the right side of it. It can be a monster mover, but very volatile. I've had some really great trades over the years on silver, and also I've seen profits get wiped out like real quick. So be careful with it. I'm using Edgefinder. It's a nice tool. However, can you tell me the difference between economic surprise index and economic strength index? Yes, absolutely. Thank you for the question. That's a good one. So if I go over to our macro scanners, so the surprise index and strength index, they are they're both macroeconomic screeners. However, one is more short-term and one is more long-term, and they both focus on currencies. So if you take your time, open up your Edgefinder, head over to these tabs. The surprise index, if you hover over this little icon, you can read about what this tool is all about. It is a more short-term focused indicator that focuses on economic data versus expectations. So GDP versus what was expected by Wall Street, or the jobs report versus what was expected by Wall Street. And then you do that across all of the major currencies, right? So that produces a report of currencies that are beating expectations here recently versus currencies that are underperforming expectations here recently. So the way to read this would not necessarily be that the Swiss franc or the Chinese have the best economy in the world, or that New Zealand has the best economy in the world. That's not what that's saying. What it's saying is that recently, New Zealand, for example, their economic data releases have been more bullish for the currency than anticipated, meaning a better than expected jobs report, higher than anticipated inflation, etc. It's more of a trader's tool. This is if you are a currency trader, like an active currency trader, the surprise index is your friend. If you are more of a position trader, a longer term trader, then obviously you don't want to be having errors, and maybe it's messed up right now. So I will check that if it is. But the economic surprise meter is more short term. Okay, yeah, we'll look at this. I'm not sure what's down with it, but the economic strength index is kind of more focused on longer term absolute values. So this one looks at the absolute, GDP statistics versus other countries, and it is more of a long term indicator. This one is trying to interpret which economy is the strongest, which one is showing the most potential upside in the next 3-6 months type thing. So one is more short-term in nature, one is longer-term in nature. I hope that answers your question. Those are really cool tools that we spent a lot of time building. Of course, not a great look that they're not working right now, or one of them is not working, but I'm sure it's a minor fix and we'll have it working pretty soon. Yeah, so S&P 500 will be opening up in 10 minutes. The stock market will be opening up. So I'm very curious to see how that reaction goes. Silver is so far, we talked about at the top of the show, oil is still holding on right now to the 90s. We will see if that can take place. I think, before the headlines even show it, guys, if you get a break below into, like, let's call it the 80 mark, if you see 70s, there's a good chance, in my opinion, my personal opinion, if you see a breakdown into the 70s, it's a good chance that the thing is actually over. But until you see that, it's hard for me to say, like, hey, yeah, everything's going to be good. We're going to get a resolution by end of week. We have heard that story. Just a reminder, we've heard we're 2 weeks away from the end of this war since the beginning of this war. We're not there yet. And I mean, that's how these things tend to go. If you recall, if you've watched my videos and streams for a while, we've talked about that since the beginning. These things were in Ukraine and Russia. It's still going on, right? These things take time. There's a lot of, delegation, negotiation, back and forth. He said, she said kind of stuff that just takes time to play out. And, at the end of the day, the longer this thing stays problematic or uncertain, oil price is going to stubbornly remain in this range. So once you get some kind of acknowledgement from both sides that they have terms that they have agreed on, yeah, oil's going to drop. The problem is, what if they cancel negotiations entirely from here? What if they throw off the towel and say they're being ridiculous? We are no longer speaking. We're done. And, we see a resumption of the oil uptrend, right? We kind of had this huge jolt higher initially. We've gone sideways for a few months, and this sideways, this works against us. Time works against us on inflation, right? The oil just sitting here doing nothing, going back and forth, hurts the consumer because gas prices stay high. People unhappy about that, right? And I think this is just, I know that if I'm thinking of this, the leadership in Iran knows this too. Time is on their side to sit there and hold coals, or their foot to the flame, right? In regards to the inflation stickiness, the unpopular situation with the Iran war as the U.S. Goes into midterm elections, right? There is a strategy there. It's a psychological warfare type of thing. So I don't know. It's very difficult to call exactly when this thing is going to be over. Again, I do hope that it ends soon from a perspective of, people are struggling at the gas pumps. It is creating pain for people. And so we will see how it all plays out. But again, for now, I remain thinking inflation's going to be sticky. The longer this thing goes on, I do think that the dollar index could benefit from that inflation stickiness being rooted in. So we'll see. Yeah. So Trump talks about peace. Then later in the day, they attack Iran. What is going on? Yeah, it's crazy. We're just seeing back and forth headlines. And again, I think it's negotiating on both sides. There's head games going on both sides. I just think that you will not see a sustained drop in oil until you get recognition from both sides that there are terms and they are agreed upon. But we keep getting these, from both sides, we get like, the other side is okay with this. And they're like speaking for the other side. And I think every time that happens, it angers the other side again. So we'll see. I am still short pound dollar. Someone just mentioned in the chat. So I do have a short position on pound dollar. It's not going super well. I'm still red on this trade, but I do think that it could see a swing back down. I do remain, like I said, positive on the dollar. And if this stops out, then it is what it is. I'll take the small loss on it. But I'm looking for pound dollar to potentially roll over. I do think on the daily chart, pound dollar could see a return back down towards these low ends of the range. Yields are another thing I'm watching today. I'm looking for a possible opportunity to essentially short bonds, go long yields. I am looking at that here, as that is another setup within my system here. If I go US 10-year treasuries, pull this up here, what we can see is that EdgeFinder score has a -6 score overall for US 10-year treasuries. That is, please understand, not saying short yields, right? It's not a bearish yield, it's a bearish bonds. And these two things are opposite, right? So if you're saying US 10-year treasuries, the bonds themselves, if you are bearish on bonds, then you are bullish on yields, right? They go inverse to one another. So yeah. Nick, do you read books? I do not really read books. No, I listen to a lot of podcasts and documentaries. I'm more of an auditory person. Let's see. But anyways, yeah, treasuries, I do still like the upside potential for yields, which would, again, you have ZN approaching kind of this level here. TLT is testing a level of resistance here, so I'm also looking at that. And then you have, the 2-year yield pulling back a little bit, but the 10-year, the longer term, is definitely seeing some pressure here on yields to the downside. Of course, the idea here is if there's a resolution, yields probably drop. And so as we drop here, I think the risk reward for a possible continuation starts to get attractive on this for me. So I am looking at that going forward. So we'll see. And higher yields would put pressure on equities, but I'm not really willing to short equities. I think this is just a harder trade than trying to trade bonds or currencies. If you have a bearish bias on, this is my personal opinion, if you have a bearish bias on indices, for me, I would rather trade bonds or currencies to reflect that bias rather than trying to short stocks, because shorting stocks is just such a difficult trade. The index tends to, over longer stretches of time, go up. So you are really fighting an uphill battle, quite literally. If you are looking at this and you do catch the right short position, obviously that can be some of the most profitable, quick money you've ever seen if you are short. In fact, it's actually, if you've ever been short the index and watched it plummet on you, it's a wild experience. Like being short in a drop on the market, it is very fast returns. And people love that, right? If you're short on that rally, short on the drop, it can be, you could catch 5R, 10R trades pretty quickly. The problem is the market is usually, catches a bounce and grinds higher slowly. So it is hard to catch the drop that drops and drops and drops. But if you do, right, the return is massive. But generally speaking, I try to avoid shorting stocks. It's just such a difficult trade, and the timing has to be like very perfect. So anyways, I tend to prefer, if I have a bias on, inflation, I'd rather trade the dollar, which doesn't have that kind of never-ending upward drift to it. And with stocks, I think the better play is when they drop, you look at individual companies you like, you buy ETFs that you like, et cetera, and let them kind of do their work in the background. That's my strategy personally. But anyways, yeah, we will see. We've got our next show host here coming on here, guys, in just a moment. We do have Alan Perez up next. He'll be taking over the show, talking about trading setups and things that he sees. I encourage you. So we have a Telegram channel. It is free to join, by the way, where Alan is our research team person behind the scenes. He's putting out content and updates on what is going on from a macroeconomics perspective, as well as technical ideas perspective each and every day. It is completely free to join this. The link, you can scan the QR code below my camera, or we'll drop the link here in the live stream chat. It's free to join. This is, again, very high quality content being published every single day that keeps you in the loop, even if you don't have time, particularly on a certain day, to watch the stream or watch one of my videos or something like that. You can get like a 1-minute read to get a breakdown on what is happening and impacting markets now. It's free to join, so take a second to do that if you've not before. One more thing, the Edgefinder discount here for 30% off. We're closing that up today. It is 30% off. And I've mentioned this before. I know it sounds like a sales pitch, but I'm not. I'm genuinely telling you this. Honestly, we are raising the price of Edgefinder in the next week. The price is going up. This is the last discount that we will be doing on the current prices. It is the last chance to pick it up at the cost that it is currently at right now. If you would like to set up a payment plan so that you can lock in those prices, if you would like to get a discount at 30% off before this goes away, click the live stream chat link that's just been dropped. You can speak directly to a member of our team, lock in that price before it goes up. And so I'm telling you that because, again, our cost to maintaining things like Edgefinder over time goes up. We have staff behind the scenes. We have all this AI stuff we're spending money on nowadays. Like the cost goes up over time for us. And so we have not raised the price on Edgefinder in over a year and a half. And so this is going to be our first price rise to keep up with. The other thing is, with every person that we add to Edgefinder, we have support tickets that come in. So we are raising prices. I'm telling you that now so that you can take advantage this week. Don't miss it. We are raising the price. Take advantage of the discount. Set up a payment plan. Just don't miss it. With that said, up next, Alan Perez will be taking over the stream to talk about trading setups that he's watching now. Stay tuned just after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone's having a good morning, good afternoon, wherever you are watching in the world. Matthew, you said it fantastically well said there. Edgefinder rate hike is coming soon, so definitely go ahead and get you an Edgefinder copy at a discount before the price rise. The central bank of Edgefinder is going to have a rate hike here. It's 100% probability of that happening. So definitely go ahead and snag that one up there. Matthew, well said. Good morning, Sluggy. Hey, Kier. Hey, Rabies. How's everyone doing? I hope you guys are doing fantastic on the extended weekend and everything. Okay, let's go ahead and get started here with the markets and see what has happened. So last week we had a 10% drop there in oil there, give or take, right? And we are now reaching the lower bounds of this range here that I have marked up. So I have support here at $85 a barrel, West Texas oil, and then resistance will be somewhere around here at 117, where oil has reacted to that in the past. And oil has been a great reference point in terms of trying to get a gauge as to where the market thinks the Middle East is headed. As of now, you do have lower oil prices, again, a significant drop, and it seems like the market is somewhat expecting a resolution in the near term. And so my line in the sand personally will be at this $85 a barrel handle there. If you were to get a breakdown lower, then it seems like there are a very good likelihood that the Middle East conflict is going to end. And so you've seen that across with international yields yesterday. So you do have the Kiwi dollar, Aussie dollar, all had a lower drop there yesterday. And so I do think that the US does play some kind of catch up today. So you do have the 2-year yield down 1.7%, the 30 years down 1.1%. And then the 10-year is 1.65. So I do expect a little bit of softer dollar, in my personal opinion. Now, as far as directional bias, I have been very clear about my view there on the dollar index, and I do think that the dollar is positioned to go higher. However, my entry point is contingent on some technical outlook. So for a dollar index here, if I just go ahead and zoom out, just to give the new viewers here a chance to catch up there on my personal opinions on the dollar, we've been range bound since April of 2025. We've been in this range from 100.5 all the way to 96.5, right? Support there, resistance there. And then in the near term, we've been in the tighter range, which is between $98 as support and then 99.5 as resistance. And so I want to participate in long dollar. However, I would need to see something like this. So as far as the current resistance where we are at right now, near 99.5, I would like to see a break and retest of this zone and then buy it there if it holds, or wait for a pullback in dollar index. And I'm thinking right here where this 200-day moving average is right there in yellow. I don't want to blindly just buy here because, yes, technically, if I were to just buy right here and then I get the break and retest, I would have been early and I would have, taken advantage of that. Cool. But if you buy blindly here and you get a pullback here, then you are in unnecessary drawdown. Or you could buy here and it just goes completely against you, right? For some reason, the Fed just, switches all the way dovish or something like that, right? We don't know what's next. That could be another thing. So I want to wait for a technical confirmation in either direction, but I do want to stick with my dollar long thesis. And so if I put a Fibonacci from this low to high, from here to here, the 50-day or the 50% retracement level lines up right exactly where that 200-day moving average lies. So that's where I want to participate with dollar index. Now, if we were to see continued development in the Middle East, oil lower, yields lower in the US, then I think that there's a good chance that you see some continued dollar weakness there. Also, what we have to consider as well, the dollar has acted as a safe haven during this whole time. And so now we are seeing some relatively elevated dollar prices there. So if you were to see a end to the war, I do think that you do have some of that safe havenness priced out of the dollar. And so that is also another reason why the dollar loses some steam there in the short term. So I'm looking to go ahead and buy the dollar on some discounted levels. What that would look like, right? Let's say we get an end to the war. I do think that we see some continued risk on trading. So we would see Aussie dollar higher, euro dollar higher, which for me, I would like euro dollar higher in the short term because I would like to ultimately short this pair and continue riding the trend to the downside. Pound dollar has also been a very popular short trade within the community as well. I do like the level here within 1.3550. I think that's a pretty decent level. Kiwi dollar as well here. It's actually being relatively weak compared to everyone else. So maybe with Kiwi dollar, instead of getting a push higher there, we kind of just stay right here within this level, and then you just get the break and retest. It is right now at the 200-day moving average, so we'll go ahead and see. But to me, this is a good level of support. So if you were to break this level of support, break, retest, again, you would just continue the trade to the downside. Now, as far as the other dollar crosses here, dollar yen, I am on this position as well. To the short side, I am holding it. I do have a positive swap net because my other positions are doing quite well. But again, if you were to get some softness there in the dollar, I would just cut this trade and reduce my losses there. Dollar Swiss has been a good trade as well. I do think that if you were to get some relatively discounted prices on dollar Swiss, you could find some great value there. My favorite one being dollar CAD. Now, dollar CAD is giving me that Australian dollar behavior. And what I mean by that is in the past, Australian dollar, when it catches a bid, it does catch a bid and it gives you really no opportunity for pullback. And that's kind of what I'm seeing here with dollar CAD. Now, we are at this level of resistance that could be resistance here, that 200-day moving average. So we'll go ahead and see what happens today. If you do get the yield softening in the US, the dollar falls with it, then I do think that dollar CAD can present some kind of a pullback opportunity. So I'm looking to engage on anything like that. I like this level right here, this level of resistance here. So if we get a pullback here and you do see price to stall out, then this could be a level of support or resistance turned into support, and then you can kind of catch that trade as well. So let's go ahead and put a fib here from low to high to see where my possible entry points could be. Okay, so 38.2 is right here, the 50 and the 61.8. Honestly, maybe going all the way to 61.8 could be a stretch. I do like this level here. Resistance could turn into support, so I'll go ahead and stick with my 38.2% retracement there on dollar CAD. Again, I've had experience in the past where I am too aggressive or too conservative with pullbacks, and I want to try to get the most extreme pullback possible, and then you get like these shallow pullbacks, and then the price just keeps going against you or keeps going in the direction that you thought it would. So I'm going to stick with that 38.2. So I'll put an alert right over here close to this level or within this range here. That's kind of my thought process for dollar CAD. Now, as far as the current open positions that I have, I still have that Aussie basket long, and I am looking to repivot out of it. So again, if I'm going long dollar, right, I'm looking to pivot out of my Aussie basket long positions. And I do think that most of the rate hikes are priced in there for Aussie. So that's another thing that I have to be mindful of. So with Aussie CAD, I was targeting parity. I'll be fine if I just get back to these highs here. We've been doing quite well there. Aussie Swiss has been kind of lagging there. And then Aussie Kiwi has been doing quite well. Actually, today's doing a lot well because you do have the Kiwi dollar a lot weaker than the Aussie dollar. So those are my positions there. Again, my two favorite ones that I'm looking to engage in will be euro dollar to the short side and dollar CAD to the long side. So those are the pairs that I'm looking at for now. Now, as far as the chat here, let's go ahead and see. And again, if you guys have any chart markups, anything you guys want me to go over, just go ahead and put that into the chat, and I will do my best to go ahead and address that. So let's go ahead and see here. I see that the chat has been moving quite a bit lately. So let me go ahead and scroll up here and then go from the top bottom. So good morning to everyone again. Okay, let's see. We'll go ahead and talk about gold for sure. Ballout says the real story is how the bonds gain 2 points of the low, and if it will hold while BTS, I think you mean Bitcoin. I think you're talking about Bitcoin, Bala, if you want to clarify for that as well. Rev says what I think about Bitcoin. Okay, I'll get on Bitcoin as well. I'll wait for Marco to go ahead and join me as well, because Marco is more educated on Bitcoin. I don't trade Bitcoin. I'm not a Bitcoin expert by any means. The way I understand Bitcoin, I was setting this to Marco, I think it was Friday. But Bitcoin to me is not let me say this. Bitcoin to me is not an established asset. I think it's still very much a newer thing. And what I mean by established is like usually when you're building a portfolio, the average person is building a portfolio. You have exposure to certain things. You have the standard, or the standard in the past was 60/40. So 60 equities, bonds. And now I think it's more like, 60-70% equities. You have some bonds in there, and then you have a small portion of metals, and then you can throw crypto as well. I think crypto is a very much like if you want to go ahead and do it, but it's not like globally or to the average person like a necessity, right? That's what I mean by not an established asset. To me, it's very sensitive to things what's going on in Japan. So like bonds in Japan, right? If yields spike in Japan, this thing really starts to move. And it's really weird because during this whole war, right? This is Bitcoin, from my understanding, has been a very risk on asset, high yielding asset, right? And so you've had risk sensitive assets, like for example, the equities in the US that are super sensitive to what's going on in the Middle East. When things were escalating, it was dropping really hard, versus Bitcoin has actually been stable. So it's kind of weird. So I don't like Bitcoin, but from a technical lens, I see that you had a pretty big pullback and you're seeing some kind of an uptrend there. You are seeing the moving averages start to cross. So just from a technical lens, again, I think that a breakout higher in Bitcoin is probably probable. But again, I'm not an expert on that, and I would like to see what Marco has to think on Bitcoin whenever he does hop in there with me. So let's see where else we can go ahead and look at. Um, let's see. I think I'm catching up there on the chat here. Aussie 2-year yield sluggy. Let's look at the 2-year yield in Australia. Sure. Let's see what's going on there. They are very much elevated for sure. Oh, I'm on a weekly chart. My bad, guys. I'm on a weekly. I see what you're talking about. So yes, Sluggy and I, we didn't have an idea here that if you were to see yields start to break lower there in Australia, that it'll be probably a good time to go ahead and cut the trade and take my profits and move on. And it seems like we are there. So we are actually seeing Aussie 2-year yields at this level of, let's say, support or a floor there. It hasn't broken lower there, but if you do get a break lower, then I am very much looking to go ahead and take profits. I'm looking to take profits now, but again, I just want to extrapolate as much as I can from this position. So I'm going to put my alert here somewhere around here. And if you just get a break lower, then yeah, that'll be a good time to go ahead and take profits. So beautiful, Sluggy. Thank you for reminding me of that. Pound Aussie for sure. Let's go ahead and look at Pound Aussie. Let's revert to the Edge Finder to see where we stand with Pound Aussie. Now, the pound in general, isolated, is getting a bearish reading of -7. Pound dollar is getting a bearish reading of -8, which is good. Pound Swiss. Where is Pound Aussie though? Pound Aussie is getting a neutral reading of -3. So just keep that in mind, guys. So let's go to Pound Aussie. Let's see where we are at here. Okay, so this is a chart I don't like. And let me tell you why I don't like it. I think the trade is great. I think the trend is also very strong. Obviously, that's the case, right? You look at this thing here, but you are near the relative lows. So you're going to be shorting with a very developed trend already. It seems like the train has already left the station. So I would really hesitate on shorting here. Now, maybe there's short-term people out there that are like this. They are very short-term in nature. They can do something like this, and then you can just target the recent lows, right? Whatever. That's a 1-to-1. I'm actually a good fan of 1-to-1 risk reward ratios. It increases your percentage there. But look, the trend is developed. I'm not going to chase price. I would rather, right, instead, and this is just me because everyone's different. I would probably wait for a pullback to here. And to me, that's still very, very aggressive there. But I would wait for something like this instead. Maybe something like this to go ahead and short. Now, that's a long way to go, right? So maybe we don't get that far. But Pound Aussie, considering that it's getting a -3 reading, so not a very, very strong reading, I think this is just a price that you're probably trying to chase. So I'd not engage in that. Just my personal opinion. Euro Aussie. Let's go ahead and look at Euro Aussie as well. What is it getting on the Edge Finder? Let's see. Euro Aussie. Where are you? Euro Aussie is getting a neutral reading of 3, so it's more on the bullish side of things, which is some divergence there because you're seeing pound more leaning bearish, but Euro Aussie getting bullish. Let's see here. I didn't take any trades here, but we are getting. Let me just delete this fib here.
Oh, I think you're muted.
Hello?
Yep, I can hear you now.
Bro, have I been muted this whole time? Please tell me.
No, just the last 10 seconds.
Oh, okay, thank goodness, dude. I was like, oh my good. And I heard a Discord notification in the background. So my mind immediately went like James probably told me like, bro, you're muted. Okay. Cool.
Just finish your thought and then we can do the joint segment.
Sure. And thank you. I didn't realize you had joined me. But you're Aussie there hitting some support there with this range that I have identified. It's getting a +3 reading, so it's not very bullish yet. So we'll go ahead and keep that in mind. That's kind of what I would look at for the person that requested your Aussie Yoshi there. So just go ahead and monitor the Edge Finder reading. If you get a bullish score, then I think this is solid support. You could probably trade the range. All right. Hey, Margo, man, how you been?
I've been pretty good. So yesterday I actually joined the live stream and no one was there, so I was a bit confused. But then I remembered that it's a holiday for you guys in the US. So yeah, I've been pretty good. Took a sell on NZD/USD because I'm betting that the RBNZ meeting tomorrow will be less hawkish than what is priced in. So we have 76 basis points of hikes, and if you look at the economy for New Zealand, I don't think they can do that huge amount of hikes. So I think it's going to be less hawkish. Maybe one hike this year, maybe two hikes, but 3 hikes of 25 basis points just doesn't seem right to me. So yeah, took a sell, betting on. So this meeting, they're actually releasing the future projections. So 4 times per year, the RBNZ releases future projections of the interest rate. And if they move it a lot higher, well, then I'm going to stop out. But if they keep it the same or move it just a little bit higher, then this position could run. And of course, I'm benefiting from the recent switch to risk off. So I think this week has started off not so great in terms of the Middle East, which is bidding up the dollar. Is that correct? I think I saw it in Financial Juice.
I've actually thought that things are getting better in the Middle East. So I'll give you the way I'm kind of seeing it through my lens. Markets were closed yesterday. The U.S. markets were closed, but you did have a significant drop in oil last week. And if I measure the move out from last week till today, till today, it's about 10% drop in oil. And for me, like oil has been my gauge as to like where the market is digesting what's going on in the Middle East. So if you get a high price of oil, obviously the market's pricing an escalation, and then vice versa. So I'll give it that we still haven't approached this level here, this 85, this level of support, and we still haven't broken below. So technically, we are still in limbo. Like we don't know what's going on, right? But yesterday, you did have international yields lower across the board, in tangent with lower oil. So to me, that was a good sign as far as de-escalation. Maybe the war comes to an end very soon. And so I think that U.S. yields here today are playing catch up with that. So you do have the 2-year yield down 1.75, the 30 down 1, and then the 10-year down 1.56. So I'm kind of expecting a softer dollar, and I'm kind of in a selfish way. I hope that we do get a softer dollar because I want to participate in like dollar CAD long. I want to pull back in dollar CAD. I want to pull back in euro dollars so I can go ahead and short that at a better price, things like that. So that's kind of where I'm thinking markets are at right now. I think we have room to go. Also, too, the dollar index is relatively towards a premium at the moment, right? And so if we think about what the dollar has acted as during this whole environment, is it's acted as a safe haven. So the way I think of it is like if you were to see some more progression in the Middle East, then you get some of that safe havenness out of the dollar. And so you get some softness there, and you do get a little bit like another flash of risk on. I think that's probable.
Yep. And so what do you think? So as far as looking at NU, if there's a de-escalation, so the money flows out of the dollar, but you also have a bunch of rate hikes priced in for New Zealand because of the conflict. So I think the unwind could actually still be NU goes down. So even though like the dollar is the safe haven and sells off if there's a de-escalation, I think New Zealand dollar sells off as well because there's so many hikes priced in, and you don't need the hikes if you get a complete de-escalation. So I'm seeing that as kind of multiple confluences that this goes down in both scenarios. But at the end of the day, I think the dollar sell-off, if you get a real de-escalation, is going to be the most powerful thing. So I don't think actually that with a de-escalation that NU sells off.
I think that, and this is for all the currency traders out there, and this is just my personal opinion. I may be dead wrong on this, but I think that it's very difficult, or you should refrain from assigning a cookie cutter approach to the currencies as far as how it will react or how each currency pair will react if you were to get a de-escalation, because this whole war has affected everyone very differently. Let me give you two opposite ends of the spectrum. You have the US, which is the net exporter. We've been doing quite well. You get a strong dollar, right, at the moment. Versus something like the Kiwi, right? Their central bank is actually very aggressive in hiking rates and also cutting rates as well. To give you a quick, I guess, like update on what I think about Kiwi, I think that Kiwi has maxed out their rate cuts, or they are maxed out for now. And they're just gonna hold from here and then be very aggressive in their rate cuts if the de-escalation happens. But again, you have two totally different economies. You have the U.S., which is a humongous economy, net exporter of oil and gas. So we're not as effective. We're still effective, but not as effective. We are still operating okay versus New Zealand, a much smaller economy, commodity-driven economy, all that good stuff. So it's going to affect everyone different. So when it comes to what happens moving forward, if you were to get a de-escalation, central banks are going to pivot differently. Some are, quicker to cut. Some are more restrictive, things like that. So that's kind of what we have to watch out for. And so we have to watch every single central bank on an individual, isolated basis to see like where we can find the lagging ones or the accelerated ones, things like that. That's kind of my personal opinion on that. And so to your point, yes, like there could be a case where Kiwi still sells off if you were to get a de-escalation because of their individual circumstances versus something like the Australian dollar, right, which is doing a little bit better. Now, no, their numbers have decreased recently, or versus the US or versus Japan, right, where they're actually trying to hike and stay there, right? So it really depends.
Yeah, absolutely. I mean, I'm basing the trade completely off of the sort of RBNZ event and like what is priced in and what is actually going to happen in the dot plot print. But another aspect of it would be, of course, asking what if we get an actual de-escalation. So yeah, thank you very much for that analysis. Personally, I'm looking at financial juice and I'm still not seeing the nuclear word. So they call it the N word, the nuclear word. I think Trump calls it that way. Essentially, I'm still not seeing any development on that front, and that's kind of the most important part. So if you don't get Iran to transfer the uranium out of the country and basically to stop enriching uranium, there's gonna be no deal. That's why I don't have confidence that this thing is gonna end soon. But at least there's a ceasefire, so that's definitely great. I think oil stays longer, or stays higher for longer, and I think Brent keeps trading in this range. So Brent is apparently the best measure for this whole conflict, and I think it stays in like 90 to 210 for a while. So like elevated for longer, not really extremely high, not really low, kind of bouncing between the support and resistance. But you're more leaning, I would say you're more leaning to a de-escalation, to a further de-escalation.
I think that's where the market's kind of leaning towards, and so that's where I'm just by default leaning towards as well. But again, like to your point, right? You get a positive thing and then you get a negative thing, right? But I'm kind of just gauging off of the price action. I was looking very briefly at the market yesterday, and so you did have like those international yields lower, oil was lower as well. So I thought of that as a good sign. But one thing too, the line in the sand for me is this level of support. So until we break this level and break lower, the war's still on. That's kind of my thing. So or at one point we were towards the lower ends of this range, but again, we are still in the range. So the war's still on. So I can't just make a solid directional convicted trade or idea or whatever saying that the war is going to be over, because I still have the price telling me that it's not over.
Yep, absolutely. And so what will be the next economic event that you're looking at? So the next data point, because all we can do at this time is focus on the data prints, focus on the actual events. So what would be the next one to watch for you? Would it be a Fed meeting? Would it be the PCE print this week? Could it be something with a different currency that you're watching?
I think the markets as of recently have actually done a really good job as like not so much putting so much weight on what's going on with the headlines and trading back onto actual data. So that's kind of what I've been looking at as well. So to make it quite simple as vanilla as possible, what I'm doing is I'm looking at the edge finder because it's still grabbing those data points and assorting them and making those scores as it should be. So I'm kind of looking at that. When it comes to, let's say hypothetically, the war ends today, and now you have to put a lot of emphasis and attention on what central banks are going to start doing, right? What I would do is look at the 2-year yields. So I will look at Australia 2-year yields, right? This is something Sluggy and I have been looking at, right? If you were to get a breakdown lower into Australia's 2-year, then you probably get some softness on Australia dollar. And this is probably where I would cut my trades and just take my profits and leave. I would look at Kiwi, what's going on in New Zealand, right? Right. If we think they're going to be wrong chart.
The first one should work, I think.
Yeah. If we were to see like what's going on there, right? To your point there, Marco, right? We have priced in all the hikes. Maybe they get dovish and then they see some softness in Kiwi dollar. Look at this 2-year yield in the New Zealand going down, and the price action of the New Zealand US dollar is going down. So there is a correlation there. Nick was mentioning that, and I need to confirm this too, that the dollar index is 75 to 80% correlated with the 10-year yield. So I need to find which yields are the same with Kiwi dollar. So maybe if Kiwi dollar is also 75 to 80% correlated with their yields, I can use yields because they're forward looking at that advantage to like where price could be going moving forward, right? So that's kind of where I'm going to look at. So sticking to the edge finder, the traditional data points that we look for, like GDP, employment, inflation, all that good stuff, let that do the work. And then I'm also going to put some emphasis on yields to see where central banks may be, or which central banks are cutting, staying hold, or hiking.
Absolutely. I love the interest rate differentials analysis. So I think the two main forces on the dollar right now is first the artificial intelligence race. So it's putting a lot of cash, a lot of capital into the US. And to buy US stocks, you need, of course, dollars. So that's the first thing pushing it up. And the second thing could be interest rate differentials, where the Fed is starting to potentially hike and all of the other central banks already priced in for hikes. So right now, the move that is lower on NU, for example, I think it could be just because the 2-year for the US is staying flat, kind of, not really dropping, while NZ02 is dropping very much. So you get the interest rate differential pulling it lower. And those are the two forces that I'm seeing on the dollar pushing it up right now. And I think if the S&P or if the Nasdaq especially can continue, and it just has, continue shooting up higher, I think the dollar will keep on catching a bid. So keep a bit of bullish pressure on that. What do you think about the dollar?
I think it's positioned to go higher. It's just where do you want to buy? And my two cases is I'm going to put my screen up here real quick. My two cases is either you get the break and retest of 99.5, or you do get a resolution to the war. You get a flash dip in the dollar because you get the safe havenness priced out. You get yields lower briefly, but then ultimately I'm looking to pick up dollar at some value. So I've marked up here my fib, basic low to high. The 50% lines up right there on that 200-day moving average. So that's probably where I would like to go ahead and buy a dollar. But I'm even open to if we get to 98 as well. For some reason we get to 98, then I'm looking to pick it up there. And then I would target 99.5 or 100.5. And then ultimately we'll see how long it lasts, right? If you do get, like you mentioned before, and you've said it pretty well, US exceptionalism, maybe we can break out of this boring trend that we've been in for a while, right? Since early April of 2025. We've been just sideways here. And so maybe you get a breakout higher and then you can start targeting 102, 103. But then again, that's getting ahead of myself. But I will say this. Moving averages have crossed, which is good. The longer term moving averages, at least the 200-day and the 50-day. So we'll go ahead and see if you get some support there. And then we can, if I can be in this trade for weeks to months on the dollar. So like long dollar CAD, build up a position, short euro dollar, something like that for a long period of time. And that's going to be the trade for the next couple months. I will be so happy with that because the swaps that I will be collecting on that will be so hefty. Like that would be my best case scenario. And then I just take profits along the way, things like that. So, or just build over time and then make it a monster position. That's kind of my my best case scenario on the dollar.
Okay, cool. So you're paying a lot of attention to swaps as well, which is of course a very smart thing to do, especially if you're running a big account. I mean, there's hedge funds out there basing their strategies on swaps. Like
Yeah.
they're making most of their profits from swaps. So you always need to watch out for those, especially if you're selling UJ or USD Swiss, for example. You can it can get very expensive very quickly. But I want to ask you about IPOs. So we have a lot of big IPOs coming up, SpaceX being one of them. My research tells me that they could be bearish for the stock market as a whole. And there's actually a couple of trades you can do. Is you can sell the S&P or the NAS, especially the NAS, going into, let's say, the SpaceX IPO. So the theory behind it is once a company does an IPO, it's usually the smart money offloading all of the bags to retail. So if a company is doing well and they can attract capital privately, they would. Essentially, an IPO is the last stage of investors investing in a company, because that is when the smart money dumps all of their bags onto the retail. So that could introduce a lot of selling pressure on the market as a whole, especially since SpaceX is evaluated at crazy numbers. So just wanted to get your take on that.
Yeah, sometimes the IPO is the exit point for the people that were early on, right? Because if you hold such a massive, if your company is evaluated at a super high level, for example, super high number, let's say SpaceX, and you're the majority shareholder, you cannot just offload that. You need someone else on the other side of the position to offload that position, or to offload those shares. So giving that access to the public market, you do get a lot of like upfront euphoria, excitement, stuff like that. You get those buyers in there, and that's where most of the time most people start to, or the majority shareholders start to offload. I think what could happen there for stocks, for example, the Nasdaq. I mean, look at this. We're shy of 30,000. I think it's moving in a straight line higher. So I do think that if you were to get some of that stuff, I mean, Nasdaq is positioned to go higher. You know, it's a weird chart to look at, especially in the environment that we're with somewhat elevated yields, but it's crazy. What I would think is that if you were to see the Nasdaq continued higher, and then you still see yields elevated, especially with like these extra valuations and companies that are coming into the market, like for example SpaceX, higher yields dwindle those valuations. So that would be very tricky territory. So for me, I would stay away from this. I wouldn't short the market, because the market seems very strong at the moment.
Yeah,
Nick said it best. He would probably just instead via proxy trade bonds or trade currencies instead of just playing out shorting this freight train that's coming full steam ahead.
Absolutely. It's a dangerous trade, but also very interesting to see what happens. And this chart looks crazy. I just laugh at it every time I see it. But so yeah, any last things you want to look at?
I did, yeah. So I was asked about Bitcoin, and I probably didn't give the best answer. And I know you trade Bitcoin more actively. Do you have any thoughts on Bitcoin? What's going on with it for projections, things like that?
Yeah, sure, absolutely. So for Bitcoin, let me bring it up here on the chart. So let's do BTC USD. For Bitcoin, I had a buy position on the breakout, and to be honest, I was counting for more follow through, because we know there's a lead lag relationship between Bitcoin and Nasdaq. That didn't really happen. We didn't get any follow through, so I got out for plus 0.4% in the end, which was fine. A winner is a winner. But then we retraced and we're back in this kind of no man's land. Personally, I'm staying away from crypto at the moment. I think that the hype is not there. So for crypto to go up, you need hype. You need people to talk about it. You need people to be interested. You need socials to buzz around crypto. So because it's mostly retail players, and it mostly works when people get hyped up about it. Right now, all of the hype, all of the news articles are on artificial intelligence. So people that have extra money, they're parking it into AI, not really into Bitcoin. And that's your problem right there. So the use case for Bitcoin is still not super clear. Yes, transactions fine, but all of the other projects like blockchain, real estate, blah, 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 they kind of failed. A new project that I'm seeing with blockchain is actually Hyperliquid. So this site is awesome. Hyperliquid. This site is awesome for checking the price over the weekend. So essentially, we can go to, let's say, oil, you get Brent, and you get weekend pricing like you would in an open market. Then it, of course, runs on blockchain. And I think this could be the future of financial markets. So markets on a blockchain, markets using crypto technology, and the markets that are open 24/7, especially for the people that want to hedge. So let's say you're a big fund, you're running a huge risk on portfolio, and you want to hedge over the weekend. So you just go and you buy a bunch of oil on Hyperliquid, and you get a nice hedging position, and you can exit it at any point in time. So I think this is the future. And I think this, in like a couple of years, could bring the crypto space or crypto coins or Bitcoin back up into crazy valuations. But for now, I'm being patient. Yeah.
And so with Hyperliquid, you can see the overnight prices for any asset, or is it only certain sub assets?
Yeah, pretty much. Like you can. So this is oil. This is Brent. You can get S&P 500. So you can see the weekend pricing. You can see how it went into all-time highs right there. This was, I think, Saturday. You can also see gold. So gold, USDC or USDT, we didn't really get a pop over the weekend, but oil and the S&P definitely moved over the weekend. The more liquidity that goes into Hyperliquid, the sort of the better the site will be, and the use case will be better. And you can buy the coin called Hype, which goes up as long as the use of Hyperliquid goes up as well. So as long as users keep on joining the platform, I believe the Hype coin goes up in value. So you can even invest into this company through the Hype coin.
Awesome. Well, I'll definitely go ahead and look at that to get those overnight weekend prices, because usually I use IG, but I think that one only turns on like on Sunday, right? So not on Saturday, but very, very interesting. Thank you for sharing that.
Yeah, no worries. The pros, like Brent Donnelly, they're mostly, they have switched from IG to Hyperliquid. So this is the new thing that kind of the veteran traders are looking at, and it's amazing.
Okay, I'll definitely put that on my watch list then, man. Thank you so much. And
Sure.
My apologies, I've gone over 7 minutes here into your segment, so I'll let you do
this was
your
fun.
giveaway.
This was fun. Yep.
All right, man.
Okay, so I'll see you tomorrow, and time for the giveaway.
Take it easy. And one last thing here before I pivot out. Get the Edgefinder, guys. It is 30% off, and there's going to be, Nick mentioned, there's going to be a rate hike for Edgefinder, so the price is going up so tomorrow. So go ahead and last chance, guys.
Yeah, definitely do check it out. Thank you, Alan. We will talk tomorrow, and yeah, have a great day.
All right, man. Take it easy. Bye.
Yep, see you. Okay, so I want to mention, if you want to participate in the DNA-funded giveaway, you first need to apply for the Discord. So join the A1 Discord first. The link is in the comments. Okay, so join the A1 Discord, and then go to the Discord channel called Giveaways. There you can enter the giveaway for a 10K one-phase DNA funded account. Okay, so the link is in the Discord. The channel is called Giveaways. Fill it out, and you will get entered in. The giveaway will be in 5 minutes. Okay, in 4 to 5 minutes, I will announce the winner. You have to join in before that. Let me just check the schedule. So let's check the live stream schedule. Let me see if we have a guest. Yeah, Tiger is coming on after me. Okay. So, watch list. I have let's put a green flag here. I have a buy position on gold, which is active. I have a sell on the euro dollar, which I'll most likely close pretty soon, because I don't think there's a lot of juice left in selling EU. And I have a sell on NU. Okay, so those are the 3 positions that I'm running. Nikkei, I want to buy. Nasdaq, I want to buy as well. So the Nikkei is doing really good. All-time highs, crazy bullish, looks amazing. I need to pull back to the 20 MA, and then it will be game on to buy. Last week, I got the opportunity to buy. I didn't get in, unfortunately, so I didn't take it. The reason was I was expecting an equity sell-off. I was expecting the dollar to gain value. I was expecting the rate hike story to play out a bit more. That's why my initial target for euro dollar was 1.50. So that was the first target. I don't think we're going to reach it anytime soon, so I'm probably going to close this position. But that was the whole scenario. So last week, EU, I was betting on 1.15. I was betting on the equities to sell off more. And what happened in the end? Well, on Thursday, we retraced and then we just exploded into all-time highs. Nasdaq never hit the 20 MA, so never reached the entry level. Let's put the alert a bit higher. So I'm looking for the same thing, looking for a correction, a pullback. I don't want to buy all-time highs. And let me check the Edge Finder here. So let's go to Edge Finder. Let's get the readings. So Nasdaq, neutral at the moment, but the Nikkei is bullish, I'm guessing. Yeah, the Nikkei is printing bullish. Let's get a bit more data for this. Let me see. So Nikkei technicals are bullish, COTS are bullish. Economic data is bullish as well. Inflation bullish, PC bullish. Okay, interesting. The Nikkei I definitely love. And was it a mistake not getting in last week? I don't know. It didn't fit the plan. So it didn't fit the plan. So I couldn't I couldn't buy. And the only thing I can do is follow the plan. So I would say it wasn't a mistake, since the plan was to wait for this week to get in. Does it hurt watching it fly up? Yes. So it always hurts missing out the position that you have been watching for, like, I don't know, 2 months now. But hey, it's part of the game. Okay. Let's see. What do you see if Iran never gives up uranium? I'm 100% sure Iran will never give up uranium. I think they will give it up in the end, but it's going to be months. It's going to be a long period until they give it up. And it's going to be painful for the markets. Am I going to bet on that? Am I going to trade that event? Absolutely not. My edge in trading geopolitics is close to zero. I don't know what the hell Trump is thinking. I definitely don't know what Iran is thinking. I'm not even sure who is the leader of Iran at the moment. So those guys are just, they're not in a good place. They're scattered all over. And by the time a order goes from the top to the bottom, it can be a really long time. And the bottom guys don't even need to obey the order from the top. So I don't want to trade that. I want to stay away from that. That's why I'm focusing on just the economic data. So let's do the giveaway now. Let me see. Today is the 26th. Let me get all of the entries. Okay. Let's see. 26. Copy. Get my wheel of names. Paste, spin. Okay. So it's going to be a 10K one-phase DNA funded account. And the winner is Sharia M. I think that's how you pronounce it. So Sharia M, congrats on being the winner. I have your contact information. So after my segment ends, I will send you the code for a free 10K one-phase account. If you want to get funded, A1 Live, all caps, gets you 25% off any DNA funded challenge. Okay, so the code A1 Live is 25% off any DNA funded challenge. This is my personal 25K two-phase funded account. It's not given to me by the prop firm. I paid for it. Past phase 1, past phase 2, still in drawdown, trying to climb out of it. This challenge, by the way, is purely traded by ChatGPT. So ChatGPT needs to do a bit better. So far, it's not doing that great. But it's fun. It's for my YouTube channel. So I already passed phase 1 of a 50K, phase 2 of a 50K, blew the funded stage, but then did the same thing on a 25K. Passed phase 1, passed phase 2, and now in drawdown on the funded stage. So interesting. Anyway, A1 Live, 25% off. That is it for my segment. You can catch me tomorrow and I'll have another giveaway for you. I'll be streaming every single day with one giveaway per stream. I wish you good luck in the markets. If you want to get all of my signals definitely join the A1 Discord and use the code Marco for 25% off. So the last signal was NU, and it's doing pretty well. It's running in profit, so doing fine. Don't go anywhere because you have Tiger coming on right after me. I wish you, a good day, and I will see you tomorrow. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Woo-hoo-hoo-hoo! What's going on, everybody? Happy Tuesday. I tell you what, I about overshot my runway. I was thinking I had the 9:45 slot, and I looked 4 minutes ago and told my team I had to get off their live stream to hop on yours. So here we go. Let me get my chat over here so I can see what you guys are cussing and discussing about. As always, guys, let me know if you have any specific tickers. I'm just getting it pulled out over here so I can see it. Any specific tickers you're after. I am in a pound dollar short, so we'll touch on that. Come on, Skip, would you? We'll touch on that and get there we go. We good. How's everybody doing? Hope you had a wonderful Memorial Day. They finally opened my pool on Friday, our complex pool here. It's like a community pool. We got a gigantic outdoor hot tub. It's like the biggest hot tub I've ever seen. So yeah, you guys will probably start seeing me get tanner and tanner. I know I'm pretty white right now. It's pretty bad. I got to get some sunburn at least going. So anyway, yeah, a little bit of positive news over the weekend, but as always, guys, definitely don't want to be holding our breath on this stuff. Sounded like there was a little headway on the possibility, possibility in all quotes. In fact, put about 3 or 4 sets of quotes on that possibility of coming to an agreement, but we're not there yet. Positive until we did get a little bit of a skirmish in the southern part of Iran, where it sounds like the Navy or the Air Force, probably the Navy, I think it was, did throw some bombs towards some fast boats that were, I guess, accused of dropping some mines in the water. So hopefully that skirmish doesn't derail what otherwise sounds like a positive agreement, or a positive headway, I should say. I don't want to say agreement with the Middle East situation. So anyway, with that, taking a look at the Edge Finder, I was keeping an eye on this stuff yesterday, guys. Pound dollar was the number one item I personally was looking at. We are getting a nice bearish -8 on this thing. Gold actually flipped onto the list late part of last week, so that'll be interesting as well. I was basically talking myself into, I was basically discussing with myself, or talking with myself. It's okay if you talk to yourself, by the way. If you start answering yourself, you might have some problems. But anyway, I digress. So I was trying to decide between the two, pound dollar or gold shorts, and I ultimately decided on the pound dollar short. If we take a look at gold first, though, just to show you what I was looking at over here, which is the one I ended up skipping, it all really kind of started with this 1 hour zone of supply over here that had kind of created this impulse leg down all the way down to here. So we ended up breaking this structure right here. Okay. That was my first sign that I want to start looking for where's the underlying strength in that move. And so it just so happened we had a pretty decent looking 1 hour zone. Now, it wasn't the greatest volume, so this was a little bit of my hiccup. Okay, that was a little bit of the hiccup. And that's partly why I ultimately decided on the pound dollar. And not to mention, guys, when it came to this gold bearish signal, There was a couple small little hiccups that I saw. First of all, my take profit would have been this demand zone down here, which, as you can see, the trade worked out beautifully. But part of my thinking was, we had this strong gap up. If we drill down into a 15-minute time frame, you'll see that we actually created a very weak looking zone of demand right here, not too long after we gapped up. Okay, so this would have been the second 15-minute candle yesterday upon the Sunday evening open here in the States, obviously Monday morning for any of you guys across the pond. And then, of course, it jumped into the supply where the short would have been. To me, when it comes to this 15-minute zone, coupled with the fact that if I go back to a 4-hour real quick, we kind of had a former resistance turned support, turned, I guess you could say, support here, turned support. In other words, it was pretty much a support resistance line going right through that area where that 15-minute time frame was. So that's part of the other reason that I decided to not short the gold, even though, again, in hindsight, it worked out beautifully. Okay? But this is just where my pickiness really kind of comes in. Former support resistance going through that 15-minute time frame. I wasn't too thrilled with the profit, the reward to risk ratio on this, if I did want to pay attention to that. And as you can see, price bounced in, and it ended up catching a little bit of a bid from that weak zone, and it pushed all the way back up to the top. So that's why I avoided this and decided on the pound dollar short instead. So just going over here to the pound dollar, if I get my daily on the right, I got rid of some colors, guys. I was using this FMPTF indicator when it comes to telling me, it's basically an indicator that shows trends in more longer terms. So uptrend, it's going to paint all the colors green rather than showing all the red candles, the individual red candles. If you guys have seen that commercial, buy on blue, sell on red. Okay, that's kind of a similar situation. If you know, you know. It's not that same indicator, but the idea is all I care about is, hey, are we in an uptrend or are we in a downtrend? Do I really want to care about all these individual red candles coming down or just look at the overall trend? So that's kind of what this is for. But anyway, I ended up getting rid of all the crap down here I don't use. So all I care about is ATR and volume spread analysis. So anyway, so on this daily time frame, we had a structural break here. Talk about this impulse leg, which I just moved it out of the way. But there's my daily impulse leg to the downside, which, of course, broke structure. So that's really where I start over here. Now, as always, guys, I want to, and I'm just going to go to a one chart look now, and I'll go to a daily. The goal here is always the origin of the overall strong move. Where can I find, in this case, underlying, strength to the downside? So you got an option of a green candle up here, but this candle ended up getting mitigated. Okay, for a very, very short period of time, this might have acted as a supply, but needless to say, we had a very weak candle coming out of that. And I'm just going to get rid of one of my platforms. Very weak candle right here as far as your leg out candle with a wick on the bottom. This to me does not qualify as a strong leg out, which by definition would mean I can't really claim this as a daily supply zone. Okay, so it's an efficient market up here. So the first inefficiency I saw was sprouted from this daily candle here, because here's our gap. Okay, from this candle here underneath this box to the bottom of this candle. Okay, that's a strong gap. That's a strong gap down, a strong runaway gap. So to me, that acted on a daily time frame as the first inefficiency in the market right there. Okay, so obviously pull out my rectangle up top to mark my daily supply. So that's really where this all started. And oh, by the way, I get to use a former supply support resistance line, the blue dash line, from over here, okay, which is going right through that zone. So anyway, from that point, dropped down to a 4-hour, try to find my best 4-hour zone, and basically came up with another gap showing supply heavily exceeded demand to the downside. So now I've got a daily and a 4-hour confluence. Okay, daily 4-hour confluence, my favorite. Okay, that's what I want on my tombstone one day. Daily 4-hour confluence. All right, so that's this candle here. I have to, in my head, I don't like all these candles to the left, but I just got to tell myself that's part of the daily. Okay. So anyway, this is the one I went with. Our volume spread analysis candle on the leg out, as you can see, grew. Okay. Yellow candle, that's what I like to see on the leg out, showing extra tick volume, which potentially ties into institutions, which is what I want to do. I want to trade like a bank. I don't want to trade like a retail trader. I want to see what the retail trader, I want to see what the big banks and institutions are doing so I can try to ride their coattails. So to me, this looked like a pretty good spot of strength on foot orders. So from here, going over to current price, sitting in this area, we bounced into the zone. And on this 1 hour time frame, you can see we bounced into that same blue line. The former resistance becomes support, et cetera, et cetera. But we had a dilemma, a little bit of a dilemma. We'd had a weekend full of positive news, right? Not confirmed, but some positive news that there's some headway on the peace deal. So do I really want to buy dollar if it's starting to weaken according to the headlines that we heard all weekend? I don't know. I was a little hesitant about it. Okay. Even though Edgefinder is screaming to short this thing. Okay, all my other rules are met, but it was all about the headlines, the recent headlines that we were getting. Okay, so anyway, needless to say, those positive headlines caused pound dollar to gap up and push up. Weaker dollar because money would flow to more risk assets, so out of dollar, right? So anyway, price gets up into this area and I'm going to be picky and I want to see my break a structure to the downside, right? So I don't know how strong these structures are, but this is by definition a little bit of a structure. This by definition is a little bit of a structure. I wouldn't say these are major structures. I would call these more minor structures. Talking about this swing low here, guys. Swing low there, minor, again, minor swing low there. This is when you're looking at this stuff on smaller time frames. This is not true on the higher time frames. But all I'm interested in is, hey, how can I enter this thing knowing it's hit my daily 4 hour confluence with bearish scoring on the Edgefinder? So I waited for this break of structure, which you guys see I drew up a little miniature zone of demand right here, which broke structure. Okay. So do I have a zone breaking another zone? And albeit on a smaller time frame, this was really my first sign to start watching. Now, this is where a lot of traders they'll see a little bit of a breakout and they'll just start smashing the sell button. But as I've mentioned before, the markets ebb and flow. Strong uptrends have pullbacks. Strong downtrends have pullbacks to the upside. So I wanted to wait because it created this new supply zone here, which was basically, stay with me, this was basically the origin of another strong move down on a smaller time frame that broke a structure. Okay, so I want to find a new zone from the origin of this move here, as close to the origin as possible. So that just so happened to be this. Excuse me. That just so happened to be this 15-minute zone. So price comes up here and flirts with it, and it doesn't hit. Well, it doesn't hit, but yet we had the headline, okay, come out saying that there were some bombs dropped in southern Iran because of the potential mines that they were laying in the water. So I took that as my catalyst to actually go ahead and jump on the short train, guys, even though it hadn't quite yet hit my supply zone, as you can see. Okay, so that's what I did. Ended up shorting. Basically, right. I don't remember exactly where I shorted it. Still in that pesky meta trade as well. Okay, here you go. Okay, so on this candle here. So on my actual chart, you can see the same thing. Break a structure to the downside, retrace up to this supply zone. So this ended up being where I shorted, guys. Okay, so it's daily 4 hour confluence. And I have a take profit on this thing. quite a ways down. Okay, if I go to a 4-hour chart, that's really the origin of this kind of strong move up, if you will. So that's basically where I'm going to take profit. So it's about a 2-to-1. But the important thing here is because we have all these, this geopolitical tension still brewing despite the positive talks, I decided to put my take profit not only on the other side of the 4-hour zone, but over the daily zone as well. So that remains where I'm at. So just thought I would kind of take it through my mind a little bit just so you understood why I shorted it. Obviously, number one reason was because Edgefinder was giving us a nice bearish signal on this thing. Number one, within the daily downtrend, EMAs were in line, and the rest is history. So that's the trade there. Daily 4-hour tombstone says often Celtic 4-hour tombstone. Yeah. That's it. So anyway, that's kind of where I sit right now. As far as other items or ideas, let's see here. Nikkei's been jumping on and off our list for a while. I figure we'll take a look at that. Guys, let me know if you have any other tickers. See if I missed anything. Any other tickers that you're interested in? Aussie CAD, that's on our list. Okay, let's take a look at that. See if we find any decent zones of demand to buy from. As always, daily on the right. So here's the deal. I got my 8 EMA pointed upwards. This is the alligator's mouth opening to the upside. I like to see that on the daily. Higher highs, higher lows. Just got to find a little bit of a discount. But here's a little bit of worry on Aussie CAD. You can see we've already bounced into a supply. Now, at this point, I don't know how worried I am about this overhead supply, which is back in time. Because did this supply zone take out an opposing demand zone? No, not yet. Okay, you could basically call this a bit of a daily demand down here, and that's basically what we bounced into. And now we're starting the retracement to the upside. If it were a strong supply zone, it would have continued and just chewed right through that demand zone, but it didn't. It caught a bid from the unfilled orders in here and is now pushed up. So I don't think I'm worried about the rest of whatever overhead supplies in this zone. In other words, above the wick there, because it didn't even have the power to break an opposing zone. So I think we might be in the clear to break another structure to the upside. So is there a place we can buy a discount? Go back to a 1 chart look here. Start at the 4-hour. Since I already know my daily's up. We haven't bounced into the overhead supply just yet. If I'm looking at this 4-hour candle, do I have any inefficiencies down here? I don't. For a minute, this was an inefficiency. This was a zone of demand. That was for a short time is a demand zone. But the gap filled and we caught unfilled orders and now we've pushed up. So efficient. I got to keep looking higher until I find the next inefficiency. Okay, this was a zone of demand for a short while, very tiny gap, but it got closed. So that's an efficient market. So far we're efficient through all this. And as far as the next inefficiency, probably going to look at this. But did this zone break a structure? Did it break anything of relevance? Sorry, guys, I keep getting messages. Did this zone break anything of relevance? If you wanted to call this a double top, maybe. I don't know. That looks a little on the weaker side to me. So possibly we could take a look at that for a possible buy. As always, guys, not financial advice, just telling you what I'm keeping my eyes on. And then, possible take profit just at the swing high up here or right here, better yet, in the supply zone, because we did create a new supply zone right here. Oh, come on now. If I can get my boxes to make supply zone. So that's about all I'm willing to test it. Yes, the supply zone overhead didn't really break structure, but I don't want to chance it. So this may not even be that big of a trade idea, guys. But we've already seen we got an efficient market. This is our first inefficiency, which is obviously where we had our Sunday gap. So could we get a possible retracement, close the gap, collect a little bit of orders here? I don't know. I can tell you right now, I probably wouldn't take this trade because, again, did we break any major structures? Not yet. So by this price coming back in here, this would absolutely be a risky trade, I think. A little higher on the curve, even though the market's efficient down here. It's a little higher on the curve. We did not break a structure. Yes, it is a gap. Okay. And then also, as far as take profit, you really honestly can't take it until you really no further to there. So if I'm looking at the strongest bullish asset we have right now, which is the +6, okay, barely tall enough to ride this ride, it's really not paying us that much. So you tell me, is it worth it trying to squeeze about 60 pips out of that on a zone that really didn't break a structure, and not to mention had puny volume spread analysis activity? Probably going to skip that, okay? But I just wanted to kind of take you through that and how I look for efficiencies, inefficiencies, and strength in zones of demand. And this just doesn't cut it, ladies and gents. I'm deleting it, okay? So that's what I wanted to show. Got your edge finder today. Absolutely awesome. It will change your trading life, Jaylene. Absolutely change it. The first thing I noticed when I got my edge finder early last year, was just how much time it saved me. Guys, look, think about this. Forget money, forget trading successes or failures. What is the most important thing we have in life? It's time. Okay. We only have a certain amount of time. So if we can get any type of tool that saves time, in my case, at least 2 hours a day, because it was taking me a couple hours every morning just to kind of go through a lot of the stuff that Edge Finder shows us like that. So that is, in my opinion, the biggest thing with it is the time it saves to go do other productive things. Okay. Maybe focus a little more on your charts. Maybe read up on, understand how PPI affects markets, or CPI, or whatever the case is, just to get that base knowledge. Or go hang out with your family. Okay, movie night, something like that with your kids, right? You'll find that is the biggest benefit, is the time that you're going to save. Get your time back, okay? So congrats on getting that. That's awesome. Nikkei, that was our other bullish asset. And before I get to that, I want to look at the dollar index real quick over here, just to see where we're at. All right. The Dixie got an overhead zone here. We've already bounced off this zone twice, mitigated. We broke this structure here, it looks like. It's no surprise. It's just kind of going sideways the last week, guys. Again, we keep getting these headlines that are hot and that are cold, just kind of canceling each other out. I would say we're risk on overall. Just obviously from the way the markets opened yesterday. As you can see, the Dixie is trying to close its gap. Pretty much already has. So yeah, pretty well already closed the gap over there. Dollar obviously looking pretty strong overall. Okay. If you're a dollar futures trader, the Dixie futures, okay, you got a nice +5, and then not to mention pairing it with another currency. It's being really aided by trend and seasonality, because when we look at the surprise index, it's actually 50%. Okay, so it's neither strong nor weak from a fundamental point of view. Okay, but strong currencies right now are the Kiwi and the Swissy from a fundamental perspective, and of course the weak ones are the pound and the Aussie. The fall of grace the pound has had, ladies and gents. We were just talking about it up there with the euro at 100% as recently as May 18th. So that's what, 8 days ago. That it's kind of hard to see, but the dark green line, it's just plummeted. Absolutely plummeted. The pound has all the way down to 33%. Okay. It's just missed a lot of reports of late. While we're on that subject, let's just go take a quick look at the heat map. And there you go. Last 7 calendar days, all these orange font dates that you see over here. You've had 4 out of 6 reports come out missing expectations. Services PMI, okay, the retail sales CPI, and the unemployment rate have just completely flipped the British pound on its head. And again, that's partly why I ended up getting into that short. It was just because of how weak it got, even weaker than the dollar. And then even on the COT report, it was one of the bigger losers, but the dollar was there as well. So we got to keep that into context. British pound sold off to the tune of 5.5% from the big banks institutions. They got rid of 11,500 long positions and added 9,700 short. Now the dollar's right there with it. Okay. So I definitely didn't short this because of the COT report, because they're basically pretty well equal. Dollar at 5.15% there, 2,400 long, but added 6,100 short. So pretty weak. Dow is ugly weak, almost 10%. You might as well call it 10%. And then the CAD is down there at 4%. So there was really only one big winner, and that was the NASI. A little better than 4.5% increase. So they increased almost 16,000 long contracts for the NASI, but they did also add a small amount of shorts, but the longs far outweighed the shorts. So it's getting closer. It is still technically net short on the NASI, but this is quite the spike, guys. This is quite the turnaround from being as strong net short as it was. It's almost there. There you go. Net long percentage, 49.6. So it's almost there. So do you think the banks know something we don't? Yeah, the institutions? Do you think there's insider trading going on? That's always a hot topic for debate, huh? So anyway, that's just a quick look at the COT, the COT, the Commitment of Traders report there. And I got like a couple minutes. Let me double check. You bought the dip. Yep. Yep. That's right. That's right. Let's see. Wanted to look at Bitcoin real quick over here, guys, because we're pretty well neutral on this thing. Yeah, we're still kind of in no man's land. We finally bounced off that. You guys remember I was flapping my lips ad nauseum about this 1 Arizona demand over here when we had a bullish look. As you can see, we got a neutral reading, and it has clearly bounced off the zone. So there you go. Okay, went to neutral, so I avoided at that point. But zones don't care if it's bullish or bearish bias. They oftentimes work out anyway. So there you go. So yeah, pretty much in no man's land, though. We are kind of in the middle of this overhead supply. Obviously, the demand zone that I was watching forever. So absolutely no play on Bitcoin. And that's why I drew up your two scenarios, guys. If I'm trying to buy Bitcoin, I really need a break of structure here, a break of the rest of this overhead supply, which I, by the way, still have a alert there. So that way it can alert me if it starts trying to chew through this. Break a structure, retrace buy possibly. On the short side, break of the rest of the demand and retest, kind of like I drew up here. So that's really the two options I see for Bitcoin. Just looking at the technicals, because I'm not getting a good fundamental picture at all for this stuff. So, and then real quick before I get up out of here, CAD Swiss, Pound Swiss, that's our number 1 and 2 shorts. So let's take a quick look at that. Okay, day 4 hour, 2 looks over here. 8 below my 21, lower lows and lower highs on a daily. So I've got a impulse leg from there, swing low all the way down here to swing low, swing high to swing low. We broke this structure. Just need a retracement. I'm asking for a retracement up to 5720 area because I've actually got a supply on a 2-hour time frame just kind of hiding up in here, guys. Talking about this candle right here. VSA volume picked up pretty nicely on its way out and just waterfall down, broke all these minor structures and broke the major structure at the bottom. So that's the look I'm after. Just need about another 40 pip hike, or maybe 34 pip hike, I guess, to the side for possible shorts on CAD Swiss. That's going to be my number 1 short looking this week. And we've got an easy take profit if it does get us into the trade, because I got a zone down here. Okay, you could go swing low, or you could take a look at this puny zone of demand and just take your profits just ahead of that. As always, guys, say it over and over. Okay, not financial advice, but this is definitely going to be a zone, a couple zones I'll be keeping my eyes on this week. So that's CAD Swiss. And then what did I say the last one was? Pound Swiss. We're already in pound dollar. So I wouldn't be taking a pound Swiss because I'm already in a pound trade. But if I weren't, okay. So the EMAs, the alligator's mouth is trying to close his mouth. So does that mean he's closing up the trend? Possibly. You guys remember I had drawn up what I needed to see. And I'll end it on this because we had this daily supply. We had this zone structure up in here as well, the confirmation. If you guys remember, I basically said I wanted to see what happens when we enter the daily confluence, daily 2-hour, I think it was. And I kind of drew this out thinking, okay, I could see the daily kind of slowing this thing down. But ultimately, I'd probably want to see about a possible short here. Now, I didn't take it because I just didn't think that this zone looked great. It didn't even break a structure. Talking about this zone here. But hey, look what happened. It ended up catching a little bit of price pushed to the downside and ended up going all the way down to the demand zone. So there you go. That's another one that worked out, even though I didn't like it. I just thought it was a little on the weak side. It still worked. Okay? Supply and demand, I'm telling you, stuff works. And then look at that. Come down beautifully to that day, that 1 hour zone of demand, and just wicked just off the top of it before pushing back up. Supply and demand, ladies and gents. That's going to be on my tombstone as well, right next to Confluence. That's about all I got. Trade safe this week. We have a very light week economically. Not a whole lot at all. We got PCE on Thursday, and that's basically it. We do have a few other items like weekly unemployment claims and some other things that'll affect the individual currencies, but really not a whole lot of anything. It's just a light week. PMI data. Oh, that's not till Monday the 1st, so we'll get to that next week. But anyway, that's about all I got. Trade safe. And we'll be back same place, same time tomorrow. Peace out.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.